Hey, so one thing that people are talking about a lot with real estate is they're always talking about the prices. And they're like, how can these prices don't make sense? How can prices be so high? Especially people that have been in the market for a long time. Maybe they bought their first property 5, 10, 20 years ago. They're like, none of this makes sense. Or people that have even, investors that have bought properties 5 years ago are like, this doesn't, I just don't understand how the prices can keep going. I bought down here, I want another property now, but the prices up here, it doesn't make sense. So it's one of the most common questions, and there's a lot of people that are talking about different reasons, and there's a number of different reasons. Supply and demand definitely play a role for sure. Immigration levels, if you're looking at major centers in Toronto, all that type of stuff matters. Now, what isn't taken into account that I think is probably plays a far more important role than people give it credit is this factor. And let's go through this, okay? Because look, we have houses and we have money, right? And we usually exchange one for the other. That's kind of how it works. And then over time, we've realized that as there's been more demand for housing and more people have come into the area, we've needed to create more housing, right? So we create more housing and then there's more houses available and then the money's there. But what people don't account for is that over the same time, we're creating more money. The difference is we actually create more money than we create housing. We create money faster. So this money supply is growing faster than the actual housing. So what happens now? Because if we have, one house and $100,000, well, then it's very likely that, we can make that trade, right? It kind of makes sense. Now, if we have five houses and $100,000, well, we can't all of a sudden trade 100,000 for one house. It doesn't really line up there. But if we have five houses and we have $2 million, well, now we're going to trade a lot more than $100,000. Stick with me for a second. Look, so I did some simple math. I was like, okay, let's look at this in a little bit more detail. In 1970, there was 42 billion Canadian dollars in existence, roughly. I'm using round numbers here. Okay. Now in 2024, there were over 67,000 homes that sold in the Toronto, according to the Toronto Regional Real Estate Board. The average price was about 1.2, just under 1.2 million. So I want to use round math here, simple numbers. Okay. So we're going to say there were 67,000, but at $1 million. So there was $67 billion of real estate that sold in one city in Canada. And that was more than all the Canadian dollars in existence in 1970, right? And I know it can sell multiple times, so the money can change hands multiple times, things like that, but it's still, something doesn't add up. This is just a small little portion of Canada, and it's more than all the money that was available in 1970. Actually, so it's more than 50% more than all the money, so it doesn't make any sense. So, well, everyone's looking at this, and this is house prices, the blue line, compared to salaries, right? That's the average Toronto Real Estate Board sales price compared to the average Canadian yearly salary. Okay, everyone's looking at that, we're like, something doesn't add up here. How can people afford these things? They're right, it doesn't make sense. But maybe we should be looking at this. And this is something we put together. This was, I don't know now, 6, 7 years ago, we started putting this together. Oh, there it is, probably 2021, since that looks like where it ends. We put this together and we started mapping out the M2. So that's the money supply in Canada. That's the blue line. That's the M2 supply, the money supply, against the Toronto real estate average sale price. And now they're different because there's far more money in the system than there is the Toronto Real Estate Board, but you can see the trends. You can see the trends are very similar. The lines match up eerily similar. And it was interesting a few months ago when we saw this put out by wawa.ca. They looked at the same thing. And they're like, oh, that's very interesting. The money supply and the real estate prices there's some correlation here. So let's take this another step deeper. So this is the family home that we grew up in, okay? Now, in 1976, our parents paid about $96,000 for that property. So not much has changed in that property. So if they took the amount of money that our parents paid for that property, and it was a bundle of cash, that's represented there, the bundle of cash, and you put that on the driveway, that was the exchange, that block of cash for the property. Okay. Now, not much has changed over time to that property. We have put in a pool. We were fortunate as kids. We had a pool so we could swim around. That was fun. No major huge kitchen or bathroom upgrades, that type of stuff. But there was some hardwood tiles put in over time and some maintenance, but no real major changes to the property and none to the piece of land. It's in the same spot, right? But what's changed over time is the number of blocks of cash that we would have to be put on the driveway to buy that property now. We'd probably have to put, our best guess here is probably maybe 15 blocks of cash to buy that property all of a sudden. Or it was one block of cash. So and if you ask our father, it's actually probably far more. He's like, oh, this property's worth far, far more. But if we just go back for a second, we'll say it's worth this many blocks of cash, right? Now, so what's changed? Has the property changed? Has something really changed about the piece of real estate? Or has the money changed that we're exchanging for the piece of real estate? And this is what we think people aren't talking about that is well worth talking about because it impacts not just real estate, it impacts the prices of everything going on, right? So let's look at this another way. Here's home prices, that's the red line, versus wage purchasing power. So this is the average full-time earnings as a percent of the money supply in Canada. So you can see earnings, so wages paid to people that are full-time employment have gone down. This is over the last 10 years. They've gone down by about 30%, while asset prices, or real estate specifically, have gone up 28%. So this is obviously, this widens the affordability gap because if wages have gone down 30% and while asset prices have gone up, wages have gone down in purchasing power 30%, while asset prices have gone up 20%, it's getting harder and harder to afford things like a house. You want to see something scarier? Let's go back further. And if we go back further, it looks like this. It's 76% and 55% drop in the purchasing power of wages. And that's going back 20 years. So it's gotten worse and worse over time. The longer you go back, the worse it looks. It looks. So we're losing purchasing power while asset prices are growing. So there's more money in the system because we're creating more money, but the money isn't going to wages. Part of the money has been going to real estate. A larger portion than has been going to wages. That's why the real estate prices are continuing to outstrip wages. And it's not just real estate, it's other asset prices as well. Because when people realize that their dollar is losing purchasing power value, then they naturally, throughout history, humans have gone to what they feel will retain that value. Real estate has been one of those things. So when we go back and we look back over time, we're like, hey, what's the M2 growth rate on a yearly basis? And we throw it into different AIs, we'll have slightly different numbers. We get the rough idea here. This is what it kind of looks like. On a 10-year period, the average of the 10-year period, the 80s was 6.5%. We had this run up in real estate prices. And then we had this lull in Toronto real estate prices. The average growth was only 2.5% at that time, right? And we kind of overshot in the 80s. So we're coming out of that lull. In the 2000s, well, we had 6.2% growth again. You can see the real estate prices start pumping up again. In the 2010s, it was about 5%. And then in the 2020s, this went up to 2024. We had all this stimulus. We had 12% growth in 2020, 10% growth in 2021, then back down to still 5% and then 2.1 and 4% as they were trying to slow everything down. Right? What's not accounted for in this chart too is the amount of foreign capital that was coming into Canada as well that would continue to drive prices even faster than the money growth. Right? But when there's more money flowing in, it's driving these asset prices. When there's more money being created, which is like more money flowing in, right? It's just flowing in from domestically versus internationally, then that drives the asset prices too. So this is what I think is something that people just aren't looking at when they're talking about real estate and real estate prices. And it's an important factor because if you're going to try to make an investment decision, maybe it's something you need to take into account. Like, what do you think is going to happen in the future? Do you think that supply is going to go down? Because if that supply goes down, I got to tell you something. The likelihood of prices coming down is a very, very high. It's very high if that supply comes down in a meaningful way for a meaningful amount of time. It's really high. But there's a whole other host of problems that comes with that, never mind our government debt and all sorts of other debts, collateral and all these other things. So I think the probability of something like that is probably pretty small. And if it continues to grow, then what does that do with prices over time? Remember, I'm not talking short-term little trends, I'm talking long-term trends. As an investor, that's how we look at things over long-term, right? So that's a decision that we need to make. So what's changed? Remember, what has changed when we're looking at these property prices? Has the real estate changed? Has the real estate around us changed? Most of it probably hasn't changed too much. But what we're using to exchange for that real estate, the dollar, that's changed a whole heck of a lot. And maybe one day it won't be this many piles. Our fathers are going to be right. And for that house, it's going to be this many piles of cash. It's probably sooner or later, it's likely going to happen if we continue down this path with where the value of the dollar is headed and how much we debase it and how many more new currency sets we put into the system, then we need more and more to buy things, and we're seeing that everywhere. So just because there's an inflation, right now in real estate prices, or just because you're not seeing inflation everywhere at all times, it doesn't mean it's still not happening. It's just these things don't happen in a straight line. They kind of go zigzag, but the trend is that way, and it impacts us all, and it impacts affordability in a great way. And for us, whether you're looking at buying a home for your own personal use, for investors, it's probably something to take into account. I know as investors, it's one of the things that we constantly look at, and I feel like it's something that really isn't spoken about regularly because it's not taught anywhere, and maybe a lot of people don't understand it. So it might be, they might not feel it gets through. So it's just for whatever reason, it's not spoken about, but it greatly impacts everything going on in the real estate market, in our opinion, and property prices, and it's something to look at. So hope that helps. We'll talk to you next time.